Hello, this is Manesh Patel from the EII Capital Group. Today is November 22, 2010. This is our weekly Ichimoku analysis for the futures market, where we cover everything from commodity futures, from corn, soy, oil, oats, and so forth, to metals, to gold, cotton, silver, to other commodities such as heating oil, and so forth. Let's begin. We got a lot to cover today. This is our normal disclaimer. All charts are either in Thinkorswim, TradeStation, or FreeStockCharts.com. Here are my contact details. Please go to our website. We've actually made some changes and made some huge improvements. We've also are about to release the heat map either this week or next week, so that'll be available on the website. Okay. Regards to the heat map, kind of give you an idea. This is the way we're going. This is a new heat map we have here. Just look towards the bottom. What we have now is, before you've seen the daily, which is our D0, which is current daily rating. And then you saw W0, which was the weekly rating system. We're also showing you the rating system 5 days ago. So if you look at D5, that was the rating for the daily time frame 5 days ago. This is the rating today. So you could see it went from -2 to -8. So it went really, really bearish over 5 days. Same thing for weekly. W1 means the rating from 1 week ago, and W0 for the current rating now. Okay. We are making some changes and verifying this before we release this, but just kind of give you an update. This right here, all these values here are for the 4 Ichimoku rules for the daily time frame. Okay, again, you're looking at D0. Okay, sorry, you're looking at D0 here, and if you look at D0, and then you've got to compare it to W0, and you're looking for the same 5 to 8 being bullish, -5 to -8 being bearish. Okay, so if we look here, there's conflict for the wheat. There's conflict for soybeans. It actually got weaker. If you saw it last week, it was 8. If you look here, conflict for corn, conflict for sugar, conflict for coffee. Actually, there is no conflict for coffee. Coffee's still going on very strong. We'll definitely look at that one. Oats, you have a conflict going on right now. If you look at gold, gold's gotten weaker. Definitely not bullish, complete bullish now on the daily time frame, because it was 5 last week. If you look at silver, silver's still very strong. So if you could do a pairs trade where you could go long on silver and short on gold, that could possibly work out right now. If you look at platinum, platinum's down too. So you could do a pairs trade right now for silver going long and platinum going down, or maybe even gold going down. That could work. I'll definitely probably go with platinum versus gold to the short side. Look at crude oil. Crude oil is actually getting stronger on the daily, but if you look at the weekly, it's getting a little bullish. Okay, but there's still conflict among time frames where both are not bullish at all. Natural gas, you could see it's gotten stronger on the daily to the upside, but the weekly still bearish. Okay, so let's go and look at charts, because that's where we look a lot at charts, and let's just start going through a whole bunch of charts now. And see how fast we could get through things. Okay, let's go look at cocoa futures. If you look at cocoa futures, still consolidating. Kijinsen's in the cloud, so there's still indications of consolidation, but does have a high possibility of going to the downside. That's why we've got alert on the downside right now. Okay, lights through crude oil. Basically pulling back. A lot of people were bullish, then they pulled back. Right now, if you look at the weekly time frame, it's still above the Kijinsen right now, and still very bullish, believe it or not. Not as extreme bullish at all, but it's still, we're hanging around. We're hanging around, okay? And remember, this is still going to be bullish until it crosses the Kijinsen here, which is 79.15. So we still have tremendous to the upside. In fact, our target's rating still is going to be up to here to 90.20, around 90.27, which we've been talking about. Let's go look at the daily time frame. If you look at the daily time frame, we went below the Kijinsen, bounced off the cloud. Notice the Kijinsen is still bullish. Chicago's in the cloud. So we still think there's going to be, this thing's going to jump up sooner or later and start going to moving up. Only time will tell. But it looks like it may be about a week or two now, especially for the Chicago to clear out. So this thing may slowly go up or consolidate and then slowly come out of it. Okay. If you look at cotton, cotton's been pulling back. You can see from the daily, but let's go look at the weekly. Weekly, it's basically coming all the way to the Kijinsen. Key level here is 115.03 to see if it's going to hold. If it doesn't hold there, then the weekly is definitely going to be in a major correction cycle. But right now, this is still a minor correction, believe it or not, due to the percentage of move that it went up. If you look at the daily time frame, it's gone down. Definitely have alerts here. We actually need to move that alert down to here, the Kijinsen right there. So if it does start going bullish, we'll know exactly when and start looking for a trade there. Okay, U.S. dollar index. If you look at the US dollar, basically hit the cloud. We're still bearish because we're below the cloud, but in fact we're in the cloud a little because we're consolidating. But it looks like it sit there and could hug this cloud and go all the way down and then continue to go down, or it could sit there and break through the cloud. We do not know right now, but there's a high possibility of this thing going up to the top side, at least getting to about 80 now compared to before. So we'll have to wait and see on that one. Feeder cattle, there's been alerts, I think, for feeder cattle. If you look at feeder cattle, it definitely broke out for this triple top here, went to the top side. Let's go look at the weekly time frame. You can see on the weekly time frame, it's definitely got to the weekly resistance level here and stopped. Now, one thing I don't like is this Cajunson Tinkinson. Tinkinson has not followed this move up in the last 3 weeks, which is not good at all. So there could be a possibility of this thing breaking down, pulling back before it goes up. But we don't know at all right now. Definitely would look for a pullback or maybe a possible breakout trade with a huge buffer at the top side. Okay. Lean hogs, we're still in the cloud, so we're consolidating, nothing there. Copper, if you look at copper on a weekly time frame, just like gold and silver and everything, we're kind of pulling back a little, but we're still bullish, so we got to wait for a continuation on that. We're basically between the Tinkinson and the Cajunson and copper. Okay. Heating oil, if you look at heating oil, to the weekly, we're still bullish on heating oil, still looking good. If you look, well, the Cajunson is kind of like the last line of defense, but has not gotten down there, and it still looks very good for us on a long-term picture. Okay, if you look here, same thing as crude oil. We're below the Cajunson, however, the Tinkinson does not follow, so there's a high possibility of price coming all the way back up to at least here at the Cajunson, which is 2.3478, and then the magical question is what's going to happen at that point. Let's go look at coffee. Coffee is in the daily time frame, still bullish, weakening, but still bullish. If you look at here, still hasn't had a major pullback yet. We're waiting for a minor pullback at least to 195, and then a major to 175. It just depends on what it's going to do. Lumber, if you look at lumber, we're basically in a state of conflict right now, but it is setting up to possibly go higher. We just gotta wait for the signals for that to be confirmed. Live cattle, if you look, it broke out from resistance level. Little minor pullback, then it does have a potential going higher. Okay. Natural gas, if you look at natural gas is right at the bottom of the Kumo cloud. So we're basically in a big consolidation mode right now, but at least it's not at the bottom where it has been there for the longest time. Orange juice is still bullish. If you look at the trend, still very strong, but the bullish momentum is weakening. Platinum, you could tell, is a little weaker than everything else because it's actually at the Cajunson compared to the others. However, the Chicago is now finally broken through and does have a potential going to the bullish side and start a trend if this thing ever can push up. Most I said if it could push up. Okay, gasoline in the cloud, we're consolidating. A little push up, can't sit there and start a trend to the top side, but we need to push up to do that. Okay, sugar, we're basically we were in a pullback phase right now. We're waiting for confirmation for the trend to continue to at least retest the high and then go from there. Okay, mini gold, let's go look at gold. Gold, you could see, just bounced off the Tinkinson off the weekly, and looks like it's still continuing on with its trend, even with the move down last couple of weeks. But still, I would not enter here yet. If you're in a position, stay in there. Keep your stops tight and keep going forward. Corn is in a pullback right now on a weekly time frame. Soybeans are also in a pullback phase on a weekly time frame. And then let's go look at 30-year Treasury bonds. And you can see 30-year Treasury bonds were bullish. It went below the Cajunson now, but no Tinkinson Cajunson still hasn't followed. So it's going to be interesting to see what happens here. Okay. However, the more this thing consolidates, the weaker the Chicago is, and the weaker this bullish momentum is going to die. So we got to wait and see what happens. Let's quickly look at the 2-year Treasury note. Same thing. It hasn't not crossed the Cajunson yet, but this thing's still bullish. But its price is between the Tinkinson and Cajunson. Hopefully you had Hopefully you enjoyed the video. If you have any questions, please post them, or if you have any comments,